My name's Ben Lakoff. I'll be the moderator today on the real moat debate. Are chains competing on tech, brand, or balance sheet? So my name's Ben Lakoff. I run Bankless Ventures. It's an early stage fund focused in the crypto ecosystem, and will invest across all verticals except gaming. So let's start off with a quick round of intros, and then we'll jump into the questions.
Good afternoon, everyone. I'm Matt Kummell, Chief Commercial Officer at the Near Foundation. We're focused on the intersection of AI and commerce.
Hey, everyone. My name is Matt. I currently lead DeFi at Avalabs. I've been at Avalabs for just about 4 years. During that time period, I led all of our external data partnerships, as well as helped out with a variety of infra tooling and security projects within our ecosystem. Avalabs is the servicing firm behind the Avalanche blockchain network.
Hi, everyone. I'm Eunice Giarta, co-founder and GM of Monad Foundation. Monad is a new Layer 1 EVM, high performance. We're focused on bringing real-world use cases on-chain, including high-frequency finance.
Hey, everybody. Joshua Sroge, CEO at the Hedera Foundation. We're the foundation arm of the Hedera protocol. 4 years there, been in the space 10 years, which is like an eternity. It's interminable in some ways, right? How many bear markets can one person survive?
Just one more and then up only, right?
I had hair at one point.
Exactly. Awesome. So we've got people from various different chains today, and that's the debate or the topics. We're gonna not go like one by one, so feel free to jump in back and forth. But let's start it off. If your chain's tech were forked, and there were zero switching costs for all of your users, what percentage of your users do you think would stay, and why?
So I'm going to start off pretty spicy.
Let's go.
And just say there's like 3 or 4 applications in the whole space with real product market fit. I mean, you have Kalshi, Polymarket, Hyperliquid, and then a variety of DeFi protocols, but Aave is deployed on Avalanche. It's deployed also on like 5 or 6 other chains. Usually people deposit funds into Aave just depending on where they're getting the highest yield, as long as they trust that ecosystem. So I think at the end of the day, like, users are always going to gravitate to where applications are, but that doesn't necessarily mean the applications are going to accrue value back to the base layer. Polygon is a good example, and I don't mean to like trash on Polygon, but like Polymarket is one of the most successful applications of the past 3 years within blockchain, and the Polygon token has not benefited at all from that. So I think at the end of the day, it's really just about creating successful applications within your ecosystem, and that's what makes users, stay.
Yeah, I would agree with that. So maybe not so spicy of a take, but I mean, similarly, when we think about Ethereum and the Ethereum client, there's actually a lot of existing L1s that use the same exact code, right? There's Geth as a prominent EVM client. So there are already a lot of forks that exist, and yet still, somehow, mindshare still is remaining within the Ethereum space and maybe shared here and there, depending on the types of like use cases and apps that are deployed on other chains. So maybe speaking for Monad, it is also EVM. It is high performance. It's a uniquely differentiated client. So I'd like to think a majority would still remain on Monad because of the unique community, unique system of applications that would be deployed there, and not necessarily on a net new chain.
I think of this a little like, cars, the automotive industry crushed horses, right? And then, the buggy whip industry went away. Everyone's driving cars. Cars all do fundamentally the same thing. They take you from one place to the other. People select them based on a variety of factors that are specific to them, right? I want high performance. I'm okay with fragile. I want endurance, I'm okay with low performance. And so I think a lot of it is attributable to there is no one tech that does it all. And I guess the second point is, fungibility or interoperability or whatever we want to call it, is there's an inevitable march towards full interoperability. So do you really need to switch, or are there just going to be like non-benefit to the base layer, as our friend over here said, right? That things will on top will be hyper fungible, but on bottom there'll be these isolated base layers, and maybe value doesn't accrue to them. That's a whole different topic.
I think by nature, all the technology is fungible. To Eunice's point, there are so many EVM-compatible chains. Most of the technology is open source. You could just lift and shift the entire stack that most of our chains have. And so there's nothing defensible about that. And depending on when you spoke to me about this, if we were talking about this a year ago, like we would have had a much harder time holding on to customers, clients, users, because we didn't have that product market fit. But to Matt's point, like when you find that product market fit, which we found with one of our DeFi products, then people really stick around. They really are using it, and you're not forced to incent them to stick around.
That's probably perhaps a good lead-in with incentives. So incentives, you talk about like the tech being a little bit more fungible and getting these applications and getting these people excited about it. But how important is that to get the flywheel going, and how sustainable is it like long term? And do these builders stick around as soon as the incentives dry up if the tech is a little bit more fungible?
I mean, you only know when you take the incentives away. I think Josh has the longest experience here, so I would love to hear what he has to say. But from my experience just studying the industry, we've been through different phases of things that we've tried to build ecosystems. The first thing was we built great technology, and you waited for the invisible hand of the market to bring people onto your platform, and it didn't work. And so the next thing you did was you tried incentives. And so there were grant programs, and you started giving out incentives to get people to come and build, and they did. And then you took the incentives away, and many of them disappeared. And then you shifted to okay, we will invest in projects, we'll invest in funds that are specific to our ecosystem, and use that as a way to try to bring that in. And that has some benefits. That does work in some ways. There are a whole lot of ways in which that goes wrong, and you have to play janitor cleaning up, the mess of those projects going wrong. So for us, over the last year, we've shifted to the mentality of actually building products on our technology and trying to show people how the technology works and using that to bring users in, being much more product focused. It's a very complex thing to shift an organization where you have teams that are focused on building community and teams that are focused on like serving the community, and now suddenly I'm standing up. I work for a Swiss nonprofit, and I have the title of Chief Commercial Officer. And I'm thinking about this as a business, and that is what we hope is going to bring users that stay with the protocol.
I mean, right on, Matt, if I can chime in. I think there is a fundamental shift in terms of the old spray and pray foundation model, right? Where I think we played a bit of catch up. The foundation was formed a little late in the cycle of foundations, so we did a lot of that, back to using that term spray and pray, sort of like an early stage venture fund where you hope something sticks and you have a winner. You start to phase out of that and go much more directed. It's in investments, it's a much tighter strategic integration work that you fund, where there's a much more measured outcome, right? And I think that's the era we're shifting into. Partly market driven, right? I mean, look at the market cycle. Of course, if everyone's was sitting on 10x balance sheet, and we'll get to that, right? Is it the balance sheet? I think we could afford to do those things. Now we have to be much more selective.
So I actually applaud Near to being a bit early to this game, where a year or two ago, your team kind of pivoted to being focused on product, the app layer more so, rather than being focused primarily only on like the platform and infra layer. And I think that's actually going to continue to accelerate, exactly. I think most, large ecosystems, L1s, L2s, et cetera, will come to the conclusion that revenue and value accrual won't be enough from the platform layer itself, and it all accrues via the app layer. And then you have to either make opinionated bets, buying some of these teams, building yourself, doing something that is differentiated compared to your competitors, as well as driving back kind of value to the underlying token. Kind of going back to your original question, I actually originally joined the space right after DeFi summer, and I discovered Avalanche via Avalanche Rush, but I was actually a Polygon user first because they had an incentive program in early 2021 with Curve, Aave, and QuickSwap. And as a user, I didn't really care about the underlying tech as long as I didn't lose my own funds. And you just hop between different ecosystems farming.
So it worked, and you stuck around.
Exactly. So I mean, I first actually discovered Avalanche, like I mentioned, as a user during Avalanche Rush, which is our own DeFi incentive program in 2021. And it became very clear that unfortunately users did not care at all about the underlying tech. And I mean, I think we've had all of the arguments on Twitter that really have, gone full circle now, especially after the Vitalik post of 2 weeks ago where he's like, general purpose L2s kind of don't make sense anymore. And so I think instead of arguing with each other all day, it's time to make differentiated applications that people use.
There's kind of like a Maslow hierarchy of needs here, where like at some point, baseline tech and the foundational applications all serve similar purposes. Incentives, however, are nothing new to crypto. Like we see it everywhere. Like banks themselves offer, $500 when you open a new checking account. And we see it when you open a new, Robinhood account, some credits to your new account, whatnot. So it's very much like an expected thing to jumpstart, whether it's a new app, a new network. I don't think there's anything wrong with that. Now, what I think we're all trying to say here is that building on the higher levels of that Maslow hierarchy of needs, beyond just the requisite requirements for tech, but then what are the network effects? Are there composability elements within a given ecosystem? Does it make sense from an interoperability perspective or not? There's pros and cons to both. So the higher up that your ecosystem and the apps that make up that ecosystem is, I think that's where you get that stickiness factor. Yeah.
Eunice, I agree. And I think some of the interesting elements are fungibility, back to that concept, or interoperability cuts both ways. We want to create a moat, but we want to be fun to play with. And so how do we have other kids come over to our playground when there's a huge moat around it? So we have this sort of, two sides of the same coin challenge, I think, with our ecosystems, knowing that it's, no one is going to rule them all, right? They all have their particular sort of angle, use case. Some of us do overlap. If I look at, maybe not, necessarily Avalanche or something, but we'll get to it. We'll get to it.
Yeah. Very good point. So applications, got to get the use case. It totally makes sense. So you have brand, you have brand community, which is a big thing in crypto. You have tech, and then you have balance sheet, this incentives. But I think what I'm hearing here is you really got to focus on that use case, the applications, and get people using it. But maybe we jump around. Matt, I want to start with you. You kind of alluded to the applications, finding product market fit after kind of trying these other different ways. You guys have pivoted pretty hard into the AI narrative and some different products than what you had initially started with. So talk to me about the importance of how you were thinking through this shift and what it looks like.
It's not a pivot. That was very dramatic. It's not a pivot. We do have AI DNA built into the organization. So for those of you don't know, our founder, Ilya Polishukhin, was a researcher at Google. He was one of the co-authors of a paper called Attention is All You Need, which is basically referred to as the Transformers paper. And we jokingly say that, Ilya put the T in ChatGPT. So he actually started building a vibe coding business. That was the first thing he did, and then he pivoted to making a blockchain as a way to pay his contributors that were helping develop his vibe coding product. So for us, we're really, really focused on AI. You'll be hearing much more about our AI narrative. The most important thing for us is user-owned AI and confidential AI, so that when I'm speaking with the AI large language model, I don't have Sam Altman peeking over my shoulder and reading everything that I'm writing and educating his model based on that. So we recently launched a confidential version of OpenClaw, which is a AI assistant. It's a little bit sketchy the way in which it's written in JavaScript, but we have put it in a trusted execution environment. So a lot of people are putting it on a Macintosh and letting it sit alone. We're putting it into a very secure environment. We have built a AI marketplace to basically task AI agents with work. Next to that, we have this product called Intense, which is our DeFi trading protocol. We've put $13 billion of trades through it. It took us 305 days to get to our first $1 billion. That was in September. We're now doing about $3 billion every 30 days. So it's really, really picked up. We're the #1 cross-chain swapping protocol. But that's not the end point for that. The end point for that is to be the commercial arm of an AI agent. Our first use case was swapping tokens, but we're moving into out of tokens and into other assets and then into other transaction types. So you'll see us doing not just an atomic swap, but a escrow transaction. So Ben is selling me 6 tons of steel, and I put the money up, and he doesn't get the money until the steel shows up, right? So we're trying to move into that more commercial aspect. So we'll have an AI agent, we'll have an AI sort of commercial limb through Intents, and then the final piece is the underlying blockchain. So the value of our blockchain, incredibly scalable. We recently put 1 million transactions per second through it in a test case, so that's like Amex plus MasterCard plus Visa times 10. So very excited about that. And we've never had a moment of downtime. And so you need a really scalable base layer to handle all the transactions that agents are going to be putting through. So that's the vision that we're putting out there and what we're pursuing. Super excited about it. We have a conference next week in San Francisco, and we'll be announcing some what I think of as like almost armor-piercing products. So I hope that you guys are all keeping your ears open for that.
Is there a world where Near no longer has their own blockchain and instead you go all in the AI side in terms of like AI services for current blockchain ecosystems? Because Intents within our ecosystem has been very successful in terms of our DeFi, like DEX aggregators and kind of other parts of our ecosystem. I think you guys also compete on like the solver market or landscape. So like CalSwap has solvers and other similar platforms. Is there a world where you're like, you know what, there's a lot more potential building out the AI services for other ecosystems rather than trying to operate our own blockchain ecosystem? So why don't we full, steam ahead, focus on that?
It's a great question, and it's an often debated topic for us. I think the beauty of something like Intents is that it gives you access to functions and capabilities on other blockchains. We have a wallet and a sort of non-custodial stack that sits on top of Intents that allows you to access all of those other blockchains natively, including proof of work blockchain. So a lot of the like cross-blockchain solutions you've seen are very much focused in EVM, in Ethereum, in Solana, and we can get into kind of the old proof of work stuff. We can open up a wallet for you on Bitcoin and manage the keys for that. And so I don't think we ever want to give that up. I think the real value is that cross-chain capability and the ability to move assets very quickly. I think you're going to see more and more from us on first-person, first-party applications. But again, being that gateway to all the other crypto ecosystems and finding the best version of those things. The thing here for me was last summer when I joined, we were talking about trying to get to DeFi parity with every other chain. And I don't think we need to do that anymore. And that's actually a really freeing sort of experience of, okay, I don't have to make Aave, I don't have to make Compound on Near, because I can get those through Near.
Yeah. I mean, it's expensive to be on parity.
Yeah, that makes a lot of sense. Sorry, not pivot, but back to the roots, by the way. Eunice, you are kind of the outlier here. All these chains have been going for a number of years. And I think what Moat has done quite well is like build this community pre-launch and like this anticipation. A lot of people have been excited about it for a long time, but that's a very different dynamic than the rest of these guys here. So talk to me about like building that community first and then shipping the tech later and how that like maybe setting the expectations very high or just kind of that journey a little bit more.
Yeah, absolutely. Well, I think one thing to make clear is that it has been quite a long journey. The team started working on the idea behind Monad around 4 years ago, actually. So lots of effort went into it. But I think that underscores the difficulty of actually making significant change at the client level. And this is both on the execution as well as consensus clients for Monad. The community side of things also enabled our team to understand what things were important to builders, to eventual users, whether it's retail or also from an institutional perspective, because the needs there are very different. And then going back to the very last question that you mentioned about setting unrealistic expectations, I think you get into a situation where that can happen if you are promising dreams. If things are based on reality, then expectations that are set are realized. And so I think that's like one of the coolest parts about Monad. And yes, it has taken a long time to be building in quote unquote stealth. It is now open source, so you can see the code, you can see that there actually have been technical differentiators. But prior to that, I know a lot of people were like, well, are they actually doing anything unique? And will this actually, get to the performance and scale and level of reliability that is stated? And I think I'm very excited to share that yes, like it has been provable. It is live, not only live, it is open source, and anyone can, fire off their own node and be a part of the network.
That's awesome. Josh, let's so with Hedera, you guys have a pretty unique governance model. Talk to me about governance and kind of the way that you've structured it as a potential moat, or how you think about that.
Yeah, I think that's one of the main features and personalities of our ecosystem, right? It's actually, I go back to when, I was without a job in a brief period, and it was like, well, why this chain? Like, I had someone there, and it's like, this enterprise thing, it's been around, it's yesterday's mashed potatoes. How do you, and this goes back to maybe a point Matt said, how do you continually reinvent your ecosystem, reinvent your relationship to your community and product? And that's one of the great challenges in the startup world, in a sense, because we're all there. These are, in a sense, startups, and some of them get a little stale. So, I'll get to the governance thing in a second, but really it's people invest in startups, for example, maybe because of the product, obviously, product market fit, but the team has to be nimble enough to pivot. So if AI becomes very interesting and the old chain, hypothetically, guys want to pivot into that and abandon the L1, you do it, right? I mean, in a sense, it's different than an equity play, it's tokens, but you get it. Now for us, it's how do we have a cycling, group of governance members, like for example, FedEx just joined on Friday or Thursday last week, right? Kind of a big deal. Are they going to build a use case? Are they going to do a proof of concept? That's someone else's department. We're working on that. And they didn't just join as a hobby, I can say that, right? But folks fall off because there is a time cycle, right? You can't stay on it forever. And I think that does provide sort of our moat. Why are we still a top 25 coin after all these years? I think the hardest thing in this ecosystem is to stay up in that top 50 cycle after cycle, right? I've got a bag of loop ring. Who else? What happened, right? Compound. The world is full of these. I have failed product T-shirts that I like to wear on Thursdays, right? Too bad. Otherwise, I'd have BitConnect and I have a lot of Terra swag. So these are, there is each one of us and each one of these projects out there has their sort of personality archetype, like a zodiac symbol, and we need to sort of really lean into that because our community relates to it, our personality, our branding, it sort of comes together. I want to say one quick thing. Balance sheet, though, is what carries you through the bear. You've got to have the yield so that you're not just, we're all dumping tokens, we're all fighting entropy, right? Once the tokens are gone, you're just another $100 million market cap, 400th on the cap table, and it's pretty much dead.
That's a perfect segue. So we've talked about community, we've talked about applications, we've talked about different attributes that maybe give you a little bit more of a moat, but like balance sheet, incentives. Matthew, I feel like you have strong opinions on, like, especially with DeFi, like how do you keep this capital rotation to a new, shiny new chain that has perhaps better economics for these builders or these users? How do you think about like having lasting impacts with these incentive programs?
Yeah, so to me, now controlling, a good bit, I would say, of our like DeFi incentive programs and working with our foundation, it's about kind of having opinionated and differentiated bets that are very hard to replicate across many ecosystems. And a lot of that is done via just like manual work of maybe working with like an asset issuer on an RWA and having a period of exclusivity and like an RWA looping use case that's yielding somewhere between 10 to 15% annualized. It's like very novel in nature, as well as like FX use cases. Personally, I think blockchain rails are perfect for FX, but the issue is no one has really solved like the FX issues as well as like liquidity on chain. And so I think for us, like, it's just about finding differentiation that it's hard to replicate. Like having 10 or 20 different non-dollar stablecoins, natively on your chain is very hard to do in a timely manner. Like that's something that probably takes 6 months to a year plus of work. Just signing agreements with those teams, sourcing liquidity, potentially giving incentives, finding payments and pay-fi use cases for the non-dollar stablecoins, that sort of thing. And so at the end of the day, incentives, bring on mercenary capital, but differentiated use cases that are hard to replicate are how you kind of build towards sustainability.
Yeah, that makes a lot of sense. That makes a lot of sense. So we've got 5 more minutes, and I had a couple more zingers in here that we're not going to get to. So let's go around one more time and say, if you could acquire or get another ecosystem, another chain's ecosystem, snap your fingers and get it. What would you get, and why? And why can't you build that yourself organically?
Start down there.
Bitcoin.
I could say something. I mean, and by the way, it raced through my mind quickly because I'm like, oh, Canton, we just built this super enterprise. No, come on. Monero. Why? Because privacy matters. Look at the performance of Monero and Zcash, right? And like, there's and Midnight. Where's Dan? He's somewhere out here, and I'm actually saying Midnight. He's not looking at me. But that privacy aspect, if you could somehow merge that in, public-private, because the enterprises are saying, are we really going to have everything be public?
You can't build that organically?
Someone maybe, but I can't. No comment.
It's funny you say that, because we actually, acquired a privacy team 2 years ago. And I don't agree with this. I think privacy actually matters, but the reason people paid attention to Monero and Zcash is just number went up. Like, Mert made a thread on Twitter. Everyone was bull posting. Zcash went from like $100 to $500. Was there some giant new privacy-related use case on Zcash that was needed? Like, someone banned capital rotation out of their country or new capital controls happened? No. It was just number went up. Everyone's like, oh, privacy.
So you're saying they hired a good head of PGU? Price go up?
Exactly.
We're all looking for the best head of PGU here.
Institutions do value privacy, though, at the end of the day, and so I fully agree with like the tech matters. But in terms of that whole 3 to 6 month period where there's the echo chamber on Twitter where for whatever reason everyone believes now we absolutely needed a privacy for all use cases.
Well, this is a hypothetical of snap your fingers and merge or acquire another chain.
Yeah.
If you want Monero, you can have Monero, Josh. Don't you worry.
Okay, Eunice and Matt are left out of this.
Who's next? You were Bitcoin.
I mean, Bitcoin, just the amount of value that's there, but that's, the beauty for us of Intense is that I don't have to do that because I can get to the best of everything through Intense, and I know that's a cop-out, but that was what brought me to Near. That was the thing. When I was interviewing, I saw that and I was like, this is the most exciting thing I've seen. This is what I want to make my big bet on. And so that gives us that ability to get both those on-chain and off-chain parts of the world. And that's what I'm really excited about.
Okay, I'll go back to my hierarchy of needs here. Or if we think about like the base layer being technology, and eventually I do think that tech is going to be fungible, performance is going to be eventually fungible. So what makes a chain and ecosystem more unique? It's like the heart and soul, community, ecosystem users. I think the ecosystems that have that right now are Solana and Ethereum. And so one of those.
Well said. No, well said. That's very spot on. Solana has one of the most passionate public community ecosystems around, right? Without a doubt. We all look at it and say we
might
need
snipe
that.
you at a ETH conference.
Sorry, I can't hate on anyone, right? Hey, what is it? Hate the game, not the player.
Yeah. You got one?
This is an interesting debate because I feel like, Eunice, you just said community, and I'm curious to see how Solana community does if we have a really horrible bear market, because the whole community was built on like meme coin trading.
But we saw it already, right? Solana had their
their builders stuck around last bear market, and like the FTX lows when Solana got sold off to $10 or whatever, they had a very passionate user base, and I think Vitalik basically put a post out, if I remember, like December of 2022, or it might have been 2023, where he's like, Solana has a great builder base and good technology, and it's sort of put in the bottom for their token, the selling off and like the mass hysteria. So I think I agree with you in terms of the developer community. I just don't know about the actual like retail community. I would probably say like Hyperliquid, just because the cost of having that amount of liquidity, building that amount of open interest, having the market making specialty, where I mean that's kind of how it was founded in terms of Jeff's market making background. The trifecta of really like all of that put into one, it's really hard to replicate. And then not only that, they had probably the best airdrop of the past 5 years, where they made their core community like super rich. And so now they
Also
just
helpful.
have diehard people that are just always bull posting about Hyperliquid. So
It's
Wait,
only
I-
10 guys and a cat, too, right?
That's true. So obviously there's a lot of nuance to this conversation. We could keep going, but I'm pretty sure the Thai team will also snipe us if we stay up here. I'm not going to let you guys go one more time, but everybody's names are up here. You can probably find it on the website. Look them up on Twitter and all the things. And thanks, everyone.
Thank you. This was great.
Thank you.